welcome back. You're watching The Money Show on ET Now. Amid the heightened volatility on Dalal Street, how should mutual fund investors go about parking their hard-earned wealth? To deep dive into this topic, we caught up with Kotak AMC's Chief Investment Officer, Harsha Upadhyaya. Let's listen in to what he had to say.
We have had a very disciplined investment process, I would say. For almost last decade, we have been following this process diligently, irrespective of market phases and market volatility, which is investing about 65 to 75% in large cap stocks, because that provides stability, as you rightly mentioned. And we also like companies which are steady compounding stories, in our opinion. So we are more of a buy and hold kind of a investors, rather than who try to bet on events or tactical movements. So to that extent, our portfolio is long-term oriented, and 65 to 75% large cap is something that gives stability to the portfolio, and also we carefully pick some of the compounders, in our opinion, in terms of wealth creation. Then we have rest of the money invested in predominantly mid caps and a little bit in small caps. There we look for structurally strong stories where given the strength of the company and its management, it should be in a position to really compete well within the industry, and also compete with larger companies in the sector, if there are any. And those are the stories that we bet in mid and small caps. So ideally, 65 to 75% large cap and rest in mid and small caps is what we have followed over a cycle. And given the sectoral deviation that we take in the fund, we believe that this kind of asset allocation is prudent from a risk perspective, and also the investor experience is going to be a lot more comforting given stability of large caps. We have a judicious mix of some of the resilient pockets of the economy, which may not get really impacted because of COVID concerns. And I would put IT under that basket. And also we have exposure to some of the recovery plays, as in the cyclical pockets of the economy, and as and when the COVID fears subside and economic activity momentum continues, these would be the pockets where there would be further improvement in terms of business, as well as the valuations today are not as rich as what a peak cycle multiple would be. So that's where we have judicious mix of these sectors, and IT happens to be part of the COVID resilient pocket, I would say, and financials is part of the cyclical themes that we are playing under this fund. And as far as IT is concerned, I think the IT spends have remained quite robust. Rupee has remained stable, which also augurs well for margins. And by default, the travel costs have come down for the industry, which used to be a substantial cost. So overall, while growth has continued to remain at earlier levels or slightly better than earlier levels, given a little more spend that's happening on IT improvisation, but clearly the margins have been on the higher side, and we expect a lot of that to sustain even going forward. So overall, the profitability of the sector should continue along the current lines, or may improve from the current levels. Plus, these stocks have been usually high return ratio stocks with large amounts of cash flow thrown in every year. And we also have frequent corporate actions such as buyback coming from this industry. So to that extent, it remains quite a defensive investments, I would say, given the current set of market valuations and the trends. As far as financials are concerned, we clearly believe that some of the concerns on the asset quality side that we had initially during the COVID peak is unlikely to happen. So to that extent, the provisioning levels that we have seen in the banking sector by and large should be able to take care of any of those asset quality issues. And also most banks, when I say most banks, most of the large private sector banks have raised capital during the last 6 months or so. So capital is also adequate. And whenever you see credit growth returning back along with improvement in the economy, we should start seeing at least the large private sector banks outperforming the rest of the market. So that's the thesis that we are working on as far as financials are concerned.